Now when we look at the other commodities, copper has made a good up move recently above $3 a pound, and I think that will go much higher. Oil prices are looking very robust, around $80 a barrel, and I think we probably might get around $85 to $90 a barrel by the end of this year, and much higher next year. Oil and copper are leading the performances of zinc and nickel and aluminium as laggards, but they're also looking very, very strong. And the minor metals, and if we can call silver a minor metal, things like tungsten, the rare earths, lithium, are all performing quite well, and that means that a lot of the smaller stocks will be performing extremely well. When we step back and look at the economic side of things, we like to focus on the steel industry, and the Chinese steel industry at the moment is still running around 625 million tonnes per annum annualized rate. And now remember that the US is only doing about 57 million tonnes per annum, so that the Chinese steel industry is 11 times bigger than the US steel industry, and that shows that the demand for raw materials will be robust and will lead to very strong exports for Australia, good export revenues. Now at the same time we're seeing the coal market showing good signs of recovery. So all these points are reinforcing the concepts that we've had all through this difficult year, which is ending very well, that the weakness in the market last year was a real aberration, and it was an inventory adjustment on the downside going into the lows that we saw at the end of the year, and then an inventory adjustment for the first 6 to 9 months, but now we're starting to see economic recovery continuing. All these things bode well for commodities in all currencies, not just in the US dollar, but growing and performing very, very well. Now the impact on the A dollar, you've seen we've been trading around 93 cents against a weakening US dollar. I think we're going to get to parity probably in the first quarter of next year, and possibly much higher going forward, as we see both the effect of a weaker American dollar and the very strong revenues. You'll also note our correlation of the A dollar against the Philadelphia Gold Index over the last 15 years. The correlation is really quite remarkable, and that says that both the A dollar and gold shares are going to go to significant highs over the next couple of years.